Hey, welcome back. In today's episode, I'm going to go through and explain to you what is blockchain. You might have heard an awful lot about Bitcoin as a major crypto token or even a cryptocurrency. It sits under blockchain, but what really is blockchain? So I'm going to dedicate a few moments just to run through some information about it. I found this fantastic website called cryptoconsulting.org. It eloquently explains what is a blockchain. There are open and public blockchains that record transactions transparently, securely, and efficiently. The word here, open and public, this is something that is different in blockchain if you compare it to another database that may reside in a corporation or in a government council or shop or elsewhere, right? This actually transcends any corporation, any entity. It's completely open and public. That is a blockchain. It's a public ledger in which you record and commit transactions. So let's run through the typical steps on running transactions on a blockchain. So if you start from the top left, when you actually start off a transaction, what it usually happens is it gets sent to a network of nodes or computers. And why we do that? Because the network of computers, the majority, they need to actually agree and validate using some mathematical operation just to check on the validity of the transaction, just to make sure it's authentic and correct. And this is called a consensus mechanism. So usually a group of those nodes, they are dubbed as validators. So that's the remit. They actually have to validate new transactions before they actually get recorded onto the public ledger in the blockchain. They need to validate that is correct and authentic. Then the block actually gets added onto the blockchain. So in effect, the blockchain being a public ledger, in terms of how it's organized inside the ledger, it's arranged a series of blocks where a brand new block that contains a new transaction gets added on to the block, and so on. So you'll end up with an extremely long sequential list of different blocks held in the blockchain. So then once the change is distributed across the decentralized network of computers, your transaction at that point is effectively complete because it's recorded at that point. So this is a general description of what is a blockchain. What are the major characteristics? I've already discussed that, one of them being open and public. It's not just an ordinary database, it's a public database which transcends any lines of entity or corporation. But apart from that, it's immutable and persistent. What do we mean by immutable and persistent? Once you commit a transaction onto a blockchain, it cannot be changed. Mathematically, it's virtually impossible to change any recorded transaction. This is what makes a blockchain wonderfully unique from a corporate database held in a company or in a bank, where they can simply roll back the state of a database to a previous version, thereby manipulating transaction that's been recorded. If you refer to a bank loan or even bank transactions, that can easily be manipulated and rolled back before it gets committed. In the case of a blockchain, that's virtually and mathematically impossible to do. Once you record a transaction, it's kept onto the blockchain forever. We give the notion of a trust network. The blockchain is a trust network. So that's what we mean by being immutable and persistent. The next characteristic, distributed and decentralized. Well, whenever a user initiates a new transaction, then it gets validated by a network of computer or nodes, it gets distributed. The transaction gets recorded into blockchain, so every node of the network whose task is to validate transactions will receive identical copies of the same blockchain. That's what we mean by distributed and decentralized. The next feature underneath being time-stamped and audit-friendly. Well, once you've committed a brand new transaction in the block and then the block gets added into the blockchain, obviously it gets time stamped. So in the case of performing an audit on particular transactions, becomes audit friendly to refer to those transactions by a specific date in time. So it's completely audit friendly because as and when new transactions get added to the blockchain, it becomes time stamped at that point. Blockchain has a feature that it's all controlled by what we call a cryptographic security. And this is important because it helps secure the very first characteristic listed on here, being immutable and persistent. The way it achieves through cryptographic hashing, right? It's just a series of cryptographic codes. It gets tagged to every single transaction in a block on the blockchain in order to make it more tamper-proof and watertight resistant. And smart contracts. Begin to see there are an awful lot of different blockchains out there that are mainly used to create what we call smart contracts. These are like, if you think of a of a legal contract that we sign when we're buying a new deed or a new property, you can effectively transpose that and convert that into a digital contract, what we call a smart contract on the blockchain. All right, so those are the major characteristics. I also want to spend a few moments going through what are the use cases that we are seeing out there in the industry in terms of blockchain. Well, the number one, the one that's actually been started out, and Bitcoin has been the major force driver of this over 15 years ago, is a peer-to-peer payments network. So this is the first use case for the Bitcoin blockchain, where it's fundamentally used, as a payments and settlements network. So that's the ultimate use case. As we've seen that there are different types of blockchains, and it's becoming more into the mainstream, even institutions and companies are being set up to handle different types of use cases of blockchain technology. So I think the next one onto the list is things like document management. As I've discussed, there's an awful lot of debate about digitizing legal contracts onto the blockchain, as I've discussed a moment ago. And this is part of the document management use case. So that's something that's being worked on quite adequately, because you can imagine that if you can remove the layer of notary services in terms of, let's say, if you want to create a will and testament you have to go via notary service in the analog world. Well, in the blockchain world, you can automate that and remove that completely by creating a smart contract that contains the will and testament document. You sign it, and then it gets recorded onto the blockchain. So there is work on at the moment that's digitizing the contract space. The same can be true for managing any type of policies, whether it's insurance policy or life insurance policy or a car insurance policy. It's the same technology, digitizing policies and recording them securely onto the blockchain. There are also other use cases out there, whether it's land registry or recording deeds. If you start from the very beginning of when you buy a house, you need to do some conveniencing, particularly on the part of the bank. If they're giving you a loan to buy a property, they send out surveyors or convenience to actually check the state of the property. But you can automate that and do that onto the blockchain. And the same with using payments and banking. Again, that can be automated on the blockchain. So you can see that I can go on and on, but this list is a small list of the potential opportunities that are being manifested at the moment on blockchain technology. From an investment perspective, it's rapidly growing, and more people are starting to exploring, how can I get involved in this blockchain ecosystem, predominantly as an investor. When you, as an end user who wants to use some of the services I mentioned previously on the blockchain, in order to bring that to life, you need to have what we call here wallet. It's like an e-wallet, an electronic wallet that we have. So it's like an application that really, mainly consists of monitoring addresses on the blockchain and updating your own balance with each transaction. So if you set off and initiate a transaction to, let's say, I want to buy a book on another end user who has a wallet on the blockchain, and I use, let's say, Bitcoin as a token to make that purchase. Well, you need to have a wallet set up with some Bitcoin held on your wallet, which is just a series of addresses, as I said, on a blockchain. And once I make the transaction to purchase that book from another person on the blockchain, in this case on Bitcoin blockchain network, the balances will become reconciled with every transaction. So when I initiate purchase by book, the person will receive the funds and will get deducted on my wallet. So it's just an e-wallet. Is the user interface whenever you engage in transactions on a blockchain. So there's a lot of software that is responsible for how can you manage and protect your wallet on the blockchain. Well, you need to protect that through a password. We call it usually a seed phrase. So this is something that you need to protect in order to access your wallet before you actually make use of the wallet to initiate transactions on the blockchain. You need to keep it confidential and safe. This is no different from how we manage our own passwords in our day-to-day. The message is we need to set up an e-wallet, and the wallet is the user interface for starting and initiating transactions on the blockchain. And then the last thing I like to mention is NFTs. What are NFTs? Again, this is linked with blockchain. NFT stands for non-fungible tokens. They really represent what we call here real world assets like art, music, even real estate, or even identities. And I would say that the majority of the crypto tokens that you might have come across, the majority are NFT tokens. They're just for fun. And just something to be wary. in terms of investment, this is something I would strongly recommend against investing on NFTs. I view NFTs, as I said, just for fun, but not as an investment to make an investment on. There's a lot of speculation on this type of tokens, and very quickly they run themselves down to zero in terms of value, economic value. So not advisable to invest on NFT. It's true that the next wave of trend on blockchain is how can we digitize different types of what we call here real world assets. We mentioned art and music, but there's other types of assets out there that is being worked on to kind of digitize them into real world assets representatives on the blockchain. This is interesting, but like I said, be wary in terms of making investments on these type of real world assets. If there's an economic value or driver for digitizing, let's say, give an example of digitizing real world asset on the stock exchanges, looking at the possibility of digitizing corporate stocks on the blockchain, or even ETFs. These are exchange traded funds. Make them digitize and make them real world representation on the blockchain. So even in the financial space, I think they're taking the lead on converting their stocks and options and other types of financial instruments as real world assets on the blockchain. So just watch that space. So that concludes today's episode. Hopefully it's given you an idea of what is a blockchain and its potential. As you can see, the list of opportunities are growing by the day. It started out being a payments network, but as you can see, it's looking into things like document management and so on. So stay tuned to this channel. If you haven't done so, please subscribe if you want some further educational content on what to watch out for from an investor point of view. So until next time.